Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is May 9th, 2016. It is 9:15 a.m. Eastern Time. Excuse me. For those of you that are here for the first time, I want to welcome you. For those of you that are back, I want to welcome you back. Before we continue, let's go over the disclaimer. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risks. You must be aware of the risk and be willing to accept them in order to invest in future stocks and Forex markets. Don't trade with money you can't afford to lose. This website or presentation is neither a solicitation or an offer to buy or sell future stocks or Forex, and representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let us go to the calendar before we go to the charts. It is Monday. Yay. All right, so yesterday afternoon, the Japanese came out with average cash earnings year on year, much better than expected, double than expected. Aussie job advertisements month on month, less than expected. Oops. Consumer confidence for Asia came in more or less at par, as expected. German factory orders came in better than expected. Swiss CPI came in better than expected. Halifax HPI for the UK came in less than expected. Not much less, but less. Centix investor confidence for the euro came in slightly better than expected. Eurogroup meetings all day long. They don't know what to do with themselves. Housing starts for Canada this morning came in less than expected. Oops. Labor market conditions index will be coming out within the next 40 minutes for the US, and that will be it for the morning. So not much news today, and that's interesting, and probably that's the reason why the market hasn't really moved. So let's get into this. Let's look at this one. This is a crying shame because normally I would say this is a great trade, but we missed. Let's take a look at the 10 and 15 minute real quickly, and then we will go. Let's give it a minute. Okay, let's take a look at this 10 minute. Do we have anything? Not really, but the trade was really beautiful last night at around 3:30 in the morning. Mine says some Pacific time, so if it's 0:30, it was actually 12:30 at night or AM, which Eastern time is 3:30 AM. The signal came in beautifully. You literally had 30 minutes to basically take a trade and hit that thing long. Your entry probably would have been up here at 107.53 to 108.36. Not bad. Would have been practically an 80 pip move. Total move was about 100 pips, but you're never going to get 100 pips. Let's be honest with that. As for now, because it's moved so aggressively to the upside, I have to question the continuation of this trade, and I don't really have a signal on this right now that would make sense for me. So that's the beautiful thing about the market analyzer, and we'll go over the indicators very shortly. Market analyzer, I put all the instruments that I'm looking at, and in this case, it's telling me the ones that I should be considering because they're trading very close to the power dots. The power dot formation tells you three things. It's a beautiful algorithm that we created. It announces when they're starting to do their high frequency trading because they have to rebalance their order book and their risk in that direction. And so what it announces is volume, momentum, and more importantly, liquidity, which equals trade opportunity. Ouch, that hurt just saying it, but God, it feels so lovely taking it. So at this point, you know, we can look at the euro. Since the euro is in play, let's take a look at the euro. We'll take a look at futures as well. Okay. God, we missed this one. Well, we may not have. This one's a little tricky. It's only on 10 minutes. They pulled it here instead of doing it here. I don't like this, but they did this here, and then they came and boom. You know, this one, for what it's worth, this one's still worth getting into, actually. May not do a whole lot, and, you know, I'm concerned that it's going to hit this pivot right here. See? These magenta dots that you see here are pivots. These are price points that once the trade begins, they hit those levels religiously. And they either break through them to continue to the next ones, or they fail miserably, and that's the end of that. We're a little late on this trade. I'm not saying that we can't take it. I'm saying that normally I don't take it. Because once this begins, if I miss, I'm late, I'm late. And I always tell people, you know, when I train them that if you miss a trade, another one will present itself. Don't worry about it. There's no need to cry. Believe me, these guys are idiots, and their robots and algorithms that they created are just as foolish because they are constantly rebalancing. And once they take one out of balance, another one must come into balance. It's basically a simple concept. So don't despair. These dashes that you see in between the candles, this is an algorithm which is just really a gift from heaven. I'm a mathematical genius, I truly am. You know, it's a gift, I don't know, what can I tell you? When, you know, when I created this algorithm, it was for the purpose of identifying the point of control and really defining where order flow was being defined in that candle. Because there's a bunch of these individuals out there. And I'll remain civil by saying that, you know, they talk about order flow and order flow and order flow manipulation, but they have no concept of what that truly means or is. And so they give you these Franco bars with numbers and try to impress you, and you know, they do nothing. All they do is show you the average where most of the orders have been offset. That ain't the formula. That's the wrong formula. What I'm showing you is the point of control where the buyers prefer to buy and where the sellers prefer to sell. How much volume they do there, I could care less. It matters not. All that matters is there's a specific pattern right now that the banks are using, and this indicator identifies that pattern. When we see that pattern, we look for trades, and we find them. Now the question for you is, what's the pattern? Because that is the question of 1,000 words right now. Well, we're going to get to that, just not right now. So this indicator is crucial, very crucial to our trading strategy, because it decodes the intent of the banks. I know, complicated to understand, but not that complicated. These dots in between the candles, these are trend dots. Very good, because as you can see, once they break through them, they'll usually use them as resistance levels as they continue in one way or another, or support levels. So that's why I didn't want to go here, because I knew that they were going to stop. Miserable. So, and you can see this here is a trend stop. Now this, as you can see like here, basically will keep you in the trend. Now we don't live and die by this because it doesn't work that way. It is used specifically just to outline that they are, once they've initiated a move, that they're going to basically consolidate, is what many people like to use the term, before they continue to move. And that's okay. That's actually a good thing, believe me. You know, understanding what is happening in the market is very crucial nowadays, because their algorithms have been programmed to basically trade out of your fear. They know psychologically what will trigger you to not get into a trade and what will trigger you to get into a trade and get out of a trade. Very deceptive trading, you know, deceptive, unethical, I find. But then again, you know, the regulators say trade at your own risk, and only because they don't understand the algorithms and how they've been programmed. So as you can see here, when they took this trade, you know, it went from 114.05 all the way down to 113.79. Not a big trade, really, not a big trade. I would have really questioned the this trade at all, but this was the trade. Now, why the moving averages? Good question. Well, there's a few papers written out there by a few PhDs, which shall remain nameless, and so will the papers, that the banks have used basically to define their strategy. And they use these moving averages, the 200, the 100, and the 50, as a mean, not for moving average crosses. Never, ever, ever use them for moving average crosses. You will lose. They know it because they know that that's what you're looking for. And so, that's why some of these candles do not reflect the volume inside them. I haven't even brought out the volume indicator yet. That's another gift from heaven. So and that's only because we're looking for trades, but let's continue and see what else comes up. All right, so that one didn't play, so the USD is probably a dead duck too. I never liked the New Zealand cat, but God, it's just in my face a lot recently. So it has to be because of oil, no other question. Let us see why. Okay, so you're trading here. So that means there has to, yeah, right here. See, these are power dots right here. Not in the present, but they did play. Now, this is important because this is actually a trade that we could take right now. It has been defined. It's been defined more to go long than to go short. Now, that's a tricky little thing, but it's still playing to the upside. Don't have enough information. I would need to look at the 15-minute real briefly. And actually look at the 60-minute. If you identify on the higher time frame what their play is, then they're done. Inverted reaction. Trading right off the trend dot. So they're using it as a resistance level, as you can see. They've come up, hold. They're only 3 pips away, but still in question. And see, here is where sometimes we need to go to the higher time frames. Higher time frames tell you a tremendous amount of information. They basically define, will this continue or not? So in this case, this trade began way up here, came down, broke through this level. Now it's here. Is there anything here that we should be looking at? There is a pivot right here. Right here is your pivot. There's your baby. Now, this was a pretty big drop, so it's not done yet, as you can see. And I'm not done yet either. So let's look at this from the higher time frame and work our way down. The 1440 is the daily. And we're looking for power dots on the higher time frame. Oops, there it is. This was the trigger on this one. It gave it to us 2 days ago, Thursday, and then bam. So it went from 88.54 to 87.84. Not a bad move, but let's continue. And see, we look at time frames that no one else looks at. Why? Because these are the time frames that their algorithms are operating out of. See here on the 720, it was very clear. Too clear, unfortunately. And this trigger right here basically confirmed that they were going to continue to go short. Now, will they continue to go short any further is the question. That's what we must define. Should we take risk on, or should we hold, not take any risk on? That is the question. Shakespeare, very smart man. Here, for instance, we are at a quandary. Now, there's a pivot here. We've already announced that they've been playing off this one, 87.77. So, will they continue or will they hold is the question. We haven't defined that yet. We're almost there, but you can see how they've traded away from the mean, which are these moving averages. In this case, it was the 100, not the 200, and certainly not the 50. Let us continue to drill down the time frames. 480. And don't forget, there wasn't much news this morning. Very difficult. Okay, now we have a support level here in the 480. It is at 87.71. So looks like they will be making, looks like they might be making that move to the upside. Not quite clear yet, but we're getting close. Let us continue. 300. We have a pivot at 300, and we have power dots. That makes it a valid support level. Better respect it. 87.76. Now, if this closes the way it will here, then we are on the move to the upside, and that makes the trade that we were looking at earlier go long. So at this point, I actually like this trade going long. Now, I'm not willing to risk more than 10 pips, but I am willing to take this right now. And I'll explain why as we continue to drill down. Okay, we have power dots in the 240. That's crucial. That's a 4-hour. That tells you beware of the short trade. That was a little funny. It was a joke. You can laugh now. Now, do not expect to learn everything that we do in 2 hours. Now, this is a little bit, this goes above and beyond what most of you would expect or anticipate. But I will ask you to one thing, keep an open mind. I will teach you to think outside the box more than you ever have regarding the trade. And because of that, it will change the way that you trade forever and look at the market forever, because you will now have what I consider to be an institutional mindset. And if you understand the institutional mindset, then you understand the reasoning behind their trading. And if you understand the reasoning behind their trading, then you win. Because then, not only will you take trades and be accountable for them, you'll understand the risk, but you'll take them with very little regard for fear. Fear and doubt will no longer be a part of your decision process at all. On the contrary, fear and doubt will be eliminated from your decision process, because you will understand how these algorithms are programmed to, number one, psychologically affect you. 3, scare you from not pulling the trigger. And 4, completely deceive you from understanding their real plan of action. See, this is the mean right here. See this 200? They're bouncing right off of it, and of course they bounce right off of this, bounce off. This is the level that they're trading off of. 87.77 is the level that they're rebalancing their order book around. Now, this one basically just supports this level. So we're looking for more support as we go down, of course. Look at the 90-minute. And most of you use MT4, and I understand that. And I love MT4. I mean, you can execute your trades off of that if you want, but you're not going to win. They won't let you because you don't have enough information. So you have to basically adapt that you have to change. Because if you don't change, they will literally slaughter you. And that is no joke. They are in the business of managing risk because they have risk 24/7 because they're in the market 24/7. But they're also in the business of making money, and specifically taking your money. That's what this is about. It's about money. It's a business. It's not a game. Video games, buy an Xbox. for trading, understand that it is a business and they are in the business of winning. Okay, so we've identified this level. They hit this, bounced up. This is a 30-minute. Still looking for more clarity. Let's look at a 20-minute. And then we'll look at the volume. Now, crude has taken a tremendous dive today. Huge, big time. And that's probably why this thing is just, it might just start to recover to the upside because Canadian is going to take a bath in regards to it. Now here we have this, but it's inverted, these deceptive, but it's still clear on the 20. So let's continue to the 15. The role of dark pools they talk about in Bloomberg. They can't hide what they're going to do. They're in trouble because we have the algorithm to basically beat them, whip them, submit them into our game. Here's the one thing that you will learn with us. We trade on our terms, not theirs. When you understand that, things will change for you. You will have a lot more respect for your decision process and for your trade. And like I said, the one thing that we are going to help you do is remove fear and doubt from your decision process so that you can understand what their power play is. And if you understand their power play, then you pretty much have them. Remember, at one point we were down 4 pips. Now we're up. So let's see how far this puppy goes. This thing is still in play. It ain't over. No, no, no. Now, it broke these two trend dots. I'm looking for it to come up here. Once it breaks the trend stop, then I know it's on. Then I know that it must come up at least here to 88.15. And then after that, it has to work its way up 88.27 and potentially 88.32. That's not a bad trade for the morning. Like I said, the beautiful thing about the market analyzer is that it will announce to you when there are power dot formations, and usually when all the liquidity comes into the market. As you can see, everyone is lit up, and I have this on a 10-minute. So I don't know. Maybe we're doing something right. Now our results have been consistent. We did put up the video for Friday on YouTube. We haven't sent it out. We will probably send it out today along with this video. I do apologize. I got busy over the weekend. I did load it up, upload it on YouTube though. So if you want to take a glance at it, by all means, knock yourselves out. Okay, let's understand this. All right, so this is verification. Here it is. Ooh, what a beautiful thing. Wow. Can't ask for more than that. They did come down and now it's on. No, we're good standing. I like this trade. I like this trade. Once that thing goes, it will go. And once it runs, it will run. Now, we're trading FX, but I can assure you that in futures, this thing is even much more effective. And I haven't even shown you the volume indicator. So allow me to introduce to you a work of art, a masterpiece of volume. This is the one that basically killed, slaughtered, defeated everyone out there, schooled them, because they never knew it was going to hit them. And the banks, of course, never thought that someone like myself or my team would develop an algorithm that would basically unmask their lie of deception. You know, there's a saying, it's biblical. The truth will set you free. It's no joke. It is liberating to understand what the lie is so that you don't fall victim to it. I believe it applies in everything. So, how does this thing work? Good question. Allow me to introduce to you the Phoenix volume indicator. So on each candle, you're going to see buy volume, sell volume, cumulative, which is net, Well, the previous candle that just closed had 7.8 million on the buy, 15 million on the sell. It was negative and it went to the hill. This one right now has 22 million on the buy, 17 million on the sell, 19 million, and is bullish net 3.6 million right now. Now, I don't like the fact that this was ended up negative. This one was negative. This one was negative. This one was negative. This one was bullish, and this one was bullish. But it shows consistently in each candle with negative volume that they were not able to hold. Now, what that also means is that the sellers were trying desperately to get out of those trades, and the buyers were not buying because they were probably offering them at a lower price than where it was being traded and offset at. That's where the point of control comes in. See, normally in a candle, when you study candlesticks, you look at the open, high, low, and close of a candle because that's what everyone has taught you. And you never understand where the point of control, where they prefer to buy or where they prefer to sell at in that candle. That information is not available to you, not because it's not available, just because no one's created an algorithm that can basically define what they're really doing. We have. And so you're able to identify that. And when you combine it with the volume, then that takes it to a whole other level. Now, let's look at this volume indicator. You know, because for you it may seem confusing. For me, it's a work of art. I'm going to show you a little picture. Don't get scared. It's going to be invigorating. So you see this candle here? This candle here settled negative 21, 23 million because it says 23 here, right? And then it was bullish at one point, and then but it closed with a negative outcome. Oops. Then this one came in. This was bearish. 64 million on the buy, 79 million on the sell. There was a 14 million. It went bullish, but still closed with a negative outcome. See how the truth begins to display itself? Then this one, 98 million on the buy, 104 million on the sell, negative 4.7 million. Holy moly. So what do you have here? Bullish candle that have ended up with a negative outcome. And then here, of course, very little volume. 7.8 million on the buy, 15 million on the sell. There was a 6.3 million negative volume. Bullish candle with bearish volume. That concept cannot exist. There is no logic to that concept. And now, of course, we have this one, which is an inside bar. Whenever it turns gray here, it means it's trading inside the previous bar. And that means that this one has currently 55 million on the buy, 86 million on the sell. There was a 30 million negative volume. And it has come down 5 pips. Not a lot, but in this case, it has come down 3 pips from our entry. Now, normally, when I get into a trade like this, if it doesn't go my way right away, more or less, then, and it did initiate here, because this was really a beautiful, here this was just a beautiful entry to go long. But now it seems like it doesn't want to go long anymore. And so they have an issue. I have an issue. When they have an issue, I have an issue. And you should have an issue too. We all have issues. But in this case, it's a mathematical issue that doesn't add up. And when math doesn't add, then you don't have the proper equation. In this case, the proper equation for the right trade. 1 plus 1. Remember what they teach in school? 1 plus 1 equals 1. 1 plus 0 equals 1. 1 plus 1 equals 2, actually. My mistake. So that's what you're looking for. You're looking for confirmation of math. The math has to add up. That's what all these algorithms are based off. Math. Their complete strategy is mathematically based and manipulated by a robot with no emotions. But he knows that you have emotions, and he knows that your emotions take control of you. So if you don't understand what's going to happen, then you can't, if something, a trade like this goes against you, you're like, oh, no, and you begin to freak out. We don't freak out here. Here we basically maintain our calm, keep cool, and stick to the plan. If you take a small haircut, it'll be 10 pips, 10 ticks. It's okay. But if you win, you're looking for a 2, 3, 4 to 1 ratio in your favor. They hate that. They cry about it a lot, believe me. The more of you that know this, do this, trade this, they will eventually say, oh my God, who in the world did this to us? Of course, my name will come out. They'll say, Ricardo Menjivar, that bastard. He was never supposed to display our information. This is inside information, ladies and gentlemen. This is no joke. As a commodities broker, as I mentioned to you before, I had the privilege of working with some of the best software developers. We created the first electronic communications network for foreign exchange. We bridged the top 12 tier 1 banks into one master feed for the retail market. And that is where my school of thought began. The B word, yes, the B word. B word, John. I know, I'm sorry. We've just made it rated R right now. Yeah, I know. Shame on me. Slap, slap. My son, my little boy, he tells me, Daddy, don't say that. He's always correcting me. Okay, bad sign. Now, but actually, no, it's in the middle. Interesting. Do not, whenever a power dot forms, you have to analyze it both ways. Now, let's analyze the volume first. This is going to be interesting. 130 million on the buy, 138 million on the sell. That is high frequency at its best. Negative 7 million. Ouch. Good morning, sir. Now, what this is telling us right now is that they have it, they really have it hard for going negative because they want to go negative. But the buyers say, no, it's not happening. We're not letting you take control. We're about to beat you, submit you into submission, and you're going to do what we want. And so now you continue to have volume divergence. Oops. Now, here's the beautiful thing about this. See this candle? Even though it began here, it really began here. This is the one that gave you volume divergence. Yes, sir. Your phone is not charged yet. It's charging.
Look, it's my phone.
I understand. We're charging your phone. It'll be ready for you when you go to school. I apologize. It's an old cell phone, but he believes it's his phone. No, I had to come out. So, what we have here is two things in common. Price action, which is bullish, and volume divergence, which is beginning to become bullish. Wow. Yes, it's charging. It'll be ready for you soon. So what this is doing right here is basically telling you, don't go, stay. Stay. I promise that you'll be rewarded for staying. And so that's what we're doing. We're staying. Now, we missed the entry, which was here. And that was my fault because we started late. And I apologize for that. We would have probably gotten in here. We'd probably be up right now 10 pips. Instead of being in here 10 pips late and only being up 3 pips. So 2 pips. So that's also another reason why. Now, I don't like this candle. See how this candle, how the point of control is at the top and they're trading below it? I need price action to blow right through it. Because if not, what's going to happen is that this is going to settle below this and then they're going to reverse and come down. That's why I didn't like this power dot. So I wanted to see how they were going to play it. Now, we're still in game here. We're still positive. So we need this to really just pop. Now, the volume here coming in is 46 million on the buy, 40 million on the sell. So it's still bullish. Now you got 42 million on the sell, 46 on the buy. No reaction in price action. Important lesson to learn. How's price action reacting to the volume as it's coming in? You got 47 million on the buy, 45 million on the sell. Difference of 2.9 million. 3.4 million, 48 on the buy. 45 on the sell. 49, 50 on the buy. Now, I'm expecting this thing to just pop. 51 on the buy, 47 on the sell. What is happening to price action? Now, does this candle really reflect the volume that's inside of it? The answer is no. Does this candle reflect the volume inside of it? The answer is no. What do the moving averages reflect off of? Price action. If price action does not reflect off of what the real volume is being traded inside, what does that make it? Obsolete. What does that make moving average crosses? Dead in their tracks. So here we are basing it off of price action and volume. But because we understand their formula, we understand their plan of action, we understand their strategy, and we understand their decision process. Now, I told you I didn't like this. It bothered me. And if I wasn't going to see anything move, then at this point, I have to basically say that I cannot continue in good conscience to stay in this trade because it will eventually go against me. Even though they're using the trend dots here as a support level. You see? See how they've been using them? So I really need this thing to pop. But it's already moved 10 pips, so I'm assuming that there's another 10 to 20 pip move here. But it really hasn't moved because from top to bottom, this thing went from 88.32 to 87.78. You know, practically 50 pips. That's it. That's all they moved. Now, if within a 50 pip move, you can extract 25 to 30 pips, you are king or queen. But at the end of the day, we're looking for a reaction. Now, there are 7 minutes left before the news comes out. And what is the news? Labor Market Conditions Index for the US dollar. Like my sound effects? It's the coffee and the stevia. I apologize. It's a little early. We're getting there. We're getting there. Now, many times you will discover that they already know what the numbers are and they set up these trades for that. Deceptive, unethical, conniving, lying cheats is what they are. Because they should not be privy to information before you and I. That makes this completely unfair. Why is it unfair? Because we're not trading on the same playing field. So this has now become a chessboard of moves. With pawns, knights, rooks, bishops, queen, king. And so every move they make is a chess move. And they are outthinking you 10 steps. Well, in this case, we are outthinking them 11. One more step, they missed. So if you haven't played chess, you need to read a book. The whole world isn't fair. You're right, there is no justice in this world. It is only in the afterlife, once we go before our Maker. Only He can make us justice. I agree. But in the meantime, let's have fun, taking their justice away. I love you, John. So here, for instance, we must be doing something right. What are they using? The trend dots as a support level. Oops. So now it's charging.
That was my phone.
Yes, I know, but it's charging. I don't have it. So here, for instance, what we have here is we have a dilemma for them. Their dilemma is that this trade is going to be bullish. But we have a dilemma here. See, they're using the moving average right now, and they're forming power dots. Now remember, power dots basically tell you three things: volume, momentum, and liquidity are coming into the market, which equal trade opportunity. So what's wrong with this picture? This is in the middle of the range. The resistance level is here, the support level is here. This is a mid-range level, which would be very close to the mean. Mid-range, mean, they both mean the same thing. But we still need them to break through them. Now here, historically, they've broken through them, and you saw that the minute they broke through them, boom, all the way down. So I'm concerned about this right now. I am concerned because they could use this as a resistance level. They could. So we need to make sure that when the next 3 minutes, this thing continues to move up, and that the volume that they use for this specific candle, as you can see, maintains bullish outcome. See, there's very little volume right here. 25 million on the buy, 24 million on the sell, difference of 1.2 million, 1.1 million bullish. Now it's 25 against 25, 26 million against 25. Now it's evenly matched. There's a difference of 900,000, 1 million. Why? Because they're half orders. Difference of 100,000, 26 million on the buy, 27 on the sell. See what I mean? This is where you have to understand how is price action reacting to the volume that's coming into the market based on the announcement of volume, liquidity, momentum. And there's 3 minutes left on this thing. So do we stay or do we go? Sometimes, if you see this happening the way it's happening, and it doesn't make sense, more than likely, on the third candle, they will flip. Now here, they threw everything at it, but they didn't. They should have. This is a deceptive move. This is where they should have increased their volume. They did it here instead. Here, they decreased their volume to the upside, and here they continue to decrease their volume. So what is that telling you? That there is volume divergence, but it's not up anymore. It's down. And we have 2 minutes left. And so at this point, like I said, unless we see volume come in and drive this thing up, then we cannot stay in this trade. We still have 2 minutes, so we can give it 1 more minute. And then after that, if we don't see what we're looking for, then we got to go. Bottom line is that one cannot go against math. Period. They're telling you their math. That's all that matters. Let's see. Let's give them the opportunity to give us what we're looking for. See, this doesn't have bullish negative volume right now. It's all bullish. Here, it was negative. Not good. Here, it's all bullish. So we still have volume divergence. Now that means that basically we should expect and anticipate a continuation of volume divergence to the upside, along with price action. That means that we are in the right trade, right before the news comes out. What should be your stop loss? 5 pips from your entry right now. That's your risk, nothing more, nothing less. Now see, right now, the news just came out. No reaction. Everything is still bullish. The volume is still bullish, 73 on the buy, 62 on the sell. But they didn't do what they were supposed to, which bothers me. And so at this point, I cannot stay in this trade any further, and I must take what's on the table and move on. When you get into a trade, if within 30 minutes it does not do what you're expecting it to do, but you're still in the green or slightly in the red, scratch it, because you got nothing else left to do in that trade. It's just not going to give you what you're looking for, and that means that you have to move on. Did we lose? No. Did we win? Yes. What did you win? Knowledge, wisdom, and a positive outcome. But you understood what they were doing, and that is all that matters. And see, that's why I said these power dots I was concerned because To me, they can use them as a resistance level, as a continuation to the bottom, by not fulfilling the trade to the top. Still has bullish volume. Look, 17 million, 18 million. How much volume does this thing have? Too much. 110 million on the buy, 90 million on the sell. Are you kidding me? And it didn't react? With 23 million in bullish volume and this thing didn't go through the roof? No, not in this lifetime. So what that tells you is that you cannot count on the plan that they are going to execute because they have no plan. See, I was expecting this trade to go up to the mean, but I told you, they're forming power dots very close to a moving average that they use as a mean. And so, more than likely, they will continue down. We can short it from here. Shouldn't be an issue, but, it bugs me that they could come up and retest instead of, basically just going down. This thing should have just, boom, down. And it didn't. So now we have to go look for something else. Let's see what else. Euro pound. Euro New Zealand. I like that one actually, but nothing there. Euro Swissy. New Zealand dollar. Aussie yen. Let's take a look at the Aussie yen. That's always been interesting. Haven't traded that one in a long time. Again, the news that was coming out was not going to be that impacting. All right. Here we go. Oh, we just might be here on time. Let's see. Power dot here. Pivots. They're holding. Came up, came down. They went too high. They did it twice. This may be the one, but not quite yet. They are using the moving average as a mean. So will it be a continuation of the trade to the upside? They came once, twice, 3 times an angel, came back down. And it looks like they're going to go short from here. I like short. I don't like long. But I'm willing to wait for them to come up and retest a little further before I go short. Why? Because something doesn't make sense to me. This is here, and this is here. This and this cannot coexist in the same universe. This is a problem. Price action, divergence to the upside, and volume divergence to the downside cannot exist, so we must wait for them to define, to see who is right and who is wrong. Very hard. Very hard to accept and comprehend. Not the easiest concept to assimilate. It truly isn't. How's the volume coming in? It's bullish right now. Here at the very bottom, you can see 44 million on the buy, 45 million on the buy, 35 on the sell, 46 million on the buy. So you can see the volume there, and you can see it here in the data box. But you got to put the pointer on the candle. See, 48 million on the buy, 37 on the sell, 12 million bullish. It's a bearish candle with bullish volume. Can that concept truly exist? The answer is no. It cannot. The math just doesn't add up that way. At least not for trading. You see, they have reprogrammed everything to be illogical so that your method of reasoning and logic cannot be applied. And so they use that to trade off of your fear so that you cannot understand the real intent, the plan of action. Well, that changes today. Today we show you what they don't want you to see. For those of you that have been here for the first time, for those of you that are back and that have been with us for quite some time and have the software, you continue to become better and better every day. Why is that? Because repetition is the mother of all success. Why do I say that? Because eventually you begin to believe it. And it's not believing it, it's understanding it. See? That's why this didn't make sense to me. This going this way, this going this way? No, I'm not sold on that yet. Not yet. So, does that mean that what they're doing is from here, here? That's why I needed to wait. See? This was negative, slightly negative, not completely. See, it had 2.2 million negative. This one, 3 million negative. And this one just went boom, 48 million positive. Again, we're hitting a power dot level. I'm not done yet. I'm waiting for them to tell me whether this is real or not. Now, should I have looked for the trade here at the bottom? Yes, I should have. And actually, my entry would have been here. This is the pattern that I look for. This candle right here, this is your secret. Ooh. Go ahead, you can say, ooh. It's all right. If we would have gotten in here, we would have gotten from 79.26 to 79.47 right now. That's 20 pips. And this would have been early at 9:30 in the morning a.m., which is 6:30 Pacific. So we missed 20 pips, but we have a power dot. So now we have to basically see, will they stay or will they go? Because for all we know, they may be basically throwing the kitchen sink at this and then give up miserably. But that doesn't mean that I'm going to take a trade and put myself at risk when I don't have enough information. That's not how this works. We wait. We wait for them to give us the trigger. Now, if this one doesn't seem like the right one, and the only reason why this would even, this would even make sense for them to continue to go long is because the yen is itself losing value against the dollar because the Dow is going long. But this does not reflect a big move. And again, now we have two power dots. Whoops. Maybe now from here, from this point, now I may feel comfortable actually selling it. Because now my risk, if I got in here, got in at 79.44, my risk is no higher than 5-6 pips. That's all I'm willing to risk. I don't have any more risk. Where would you have entered? I just entered right now, 79.44, because it came to the very top, and I was expecting it to come all the way up here, 79.48, but didn't, so 79.44 is just as good. Stop loss should be above this wick here, or this one. So this one's right above 79.50. 79.51 is good. That means 6 pips is what your stop loss should be in this trade. But again, I was waiting for 2 power dots, and sometimes you got to wait for 3 or 4. But I'm satisfied with 2 because we got in at the very top. So now it's just a matter of waiting. Now, what's happening to the volume here? And this is important because this is where they are really deceitful. I mean, it's, they just really piss me off. I'm sorry, I just had to say it. See what they did here? Let me show you. That's why, I told you, both this and this cannot coexist. Someone is lying. Someone is lying. But your eyes are trained to view that if they go one direction, that's it, let's go long. No, that's not it. Because they may be setting you up to just beat you down. Entering short with bullish volume. You're right. I am. However, why? 54 million on the buy, 36 million on the sell. What did this have? 129 million on the buy, 86 on the sell. What did this one have? 186 on the buy, 139 on the sell. These two candles reflect one thing. Because of all the bullish volume that they both had, they should have gone through the roof. We should not have had power dots. So when the power dots came out, they announced one thing. They were rebalancing their order book, and they were bidding at a higher price than where the power dots were forming, and the sellers were not filling those orders. So next assumption is they are not planning on continuing to go long. They're planning on reversing. Where will they reverse is the question. That is the assumption. Sometimes we're right, sometimes we're wrong. See, like in this case, I told you, they may continue, they may not. It all depends. But I'm not willing to risk more than 6 pips. Now, if I'm right, then I have a 90% probability of being right, 10% probability of being wrong. Risking 6 pips or 6 ticks, I can live with those odds. Does that make sense? So yes, even though this had bullish volume, this one had bullish volume, and this one had negative volume, slightly negative, this one had negative volume, see? So this one, a bullish candle with negative volume, and then suddenly you have 3 up. Now remember, once they go long, they'll usually do 6 candles in the smaller time frames. 1, 2, 3, 4, 5, 6, 7 is the last, and then 8 is usually the reversal. Usually. So in this case, what is this telling you? That there is an imbalance of the worst kind in this candle. The sellers do not agree. What does that mean? With all this volume, they're not filling those orders. The buyers want to drive this up, but the sellers say no. This thing didn't close above the point of control, closed below it. That means that there is inconsistency in that direction. If the body of the candle would have closed above the point of control, then you have a consistent message of bullish tone. And then I would have waited even further. But because it was inconsistent from the very beginning, and the previous candle announced that inconsistency by the buyers actually buying below where it closed and the sellers selling below where it closed, then of course the next candle will have a much more inconsistent message. And what do the power dots tell us? There is volume, momentum, and liquidity buildup, and more importantly is that they're going to use that price level to rebalance their order book. So when you analyze it from that perspective, then you can very easily say, I can take risk on here. Because if they're not going to blow right through this, then they got to come right back down from it. And the odds in this case are 90-10. And if we are right, then it should come right back down to the mean, which is here 79.31, which is not a big trade because it's not. But if it breaks right through this one, it comes all the way down to 79.21. And that's a 20 pip trade. All you need is one trade in the morning to give you 20 pips or 20 ticks. We usually find 2 of them, if not 3. Today was a slow day. We got in late. We probably would have found the first trade early on, but I was late. Now we wait. So now we only get 1. The first one that we got didn't give us what we were looking for, but we didn't lose. And if this one gives us what we're looking for, then we win. Any questions? This would be the moment. Now I know that what I'm explaining is just goes against every logical brain cell in your body. Because the reasoning is it's just so hard to believe sometimes. It truly is a hard pill to swallow. Make no mistake. But it is what the banks, robots, and algorithms are doing. And so we're just trying to level the playing field by telling you what the truth is out there. So there's my email. I just dropped it in. If you have any questions, you can send me an email. My Skype, I'm just typing it in right now for those of you that are outside of the US. You can send me a Skype message. And my telephone number, 818-431-1357. That is here in the US. I just typed it in. And I'll type in my email one more time, ricardo@phoenixtradingstrategies.com. I know some of you have questions. It's okay. Send me an email. You won't be disappointed. You have questions, I have answers. If you don't ask questions, you don't get answers. So again, here we're, what are we risking? 6 pips. That's all I'm risking. I'm not willing to take on any more risk. They're still trading below this level. So long as they hold, I'm good. What was the volume here? You're right. It did have bullish volume. 135 on the buy, 110 on the sell. In terms of 25 million that did not get filled. Now this one should have less volume. See? 49 million on the buy, 21 million on the sell. In terms of 26 million. Why isn't this going through the roof? Sometimes the bullish, when I tell you look at the bullish volume as it's coming in or the volume is coming in to see how price action is acting towards it, then it's for a reason. So that you can understand whether their decision is really to continue in that direction or if they're going to flip. Now, we don't trade tops and bottoms. That's not what this is about. No. No, we can trade a continuation trade all day long as well. This is more about understanding what they're doing and how they're doing it and when you should be paying attention to considering looking at a trade and entering a trade. That's the difference. So here, for instance, you got 76 million on the buy, 77, 39, 40 million on the sell. Difference of 42 million on the sell, 43 million on the sell, 44 million, 46 million, and then you got 77 still on the buy, 48 million, 78 million on the buy, 48 million on the sell, 49 million on the sell, 80 million on the buy. Again, you're talking about 33 million in bullish volume and they can't go through the roof. This is at the high of this trade for the day. That is another thing that, you have to basically take into consideration. So you got 87 on the buy, 54 on the sell, 55 on the sell. Look at how that candle is reacting to the negative volume as it's coming in. It reacts to the bullish volume just the same, but it should overreact to the bullish volume because there's more of it, and it's not. Now sometimes they'll slightly come above the power dots and then boom, come right back down. See, 95 million on the buy, 62 million on the sell. Wow, and they have a really hard time breaking through that? I have a really hard time believing that. 65 million on the sell, 100 million on the buy, 66 on the sell, 67 on the sell, against 100 on the buy, 101 on the buy. What are we down? 5 pips. 5 pips is what we're down. 5. That's it. They're still holding. Candle hasn't closed. Almost. We'll see where it closes. Okay. See, 113 million on the buy, 77 on the sell, 78, and suddenly the sellers are in control. Is there any logic to that? There is. The buyers are bidding above this price. The sellers are not filling orders anything above this price. Why? Because their point of control is here. Whereas the buyers? Down here, right underneath our entry. You just can't see it. Where their point of control should be up here. It's not. So you got 121 million on the buy and 81 million on the sell. 82 million on the sell. Look, 83 million on the sell. I mean, without all that bullish volume, seriously, and this thing hasn't gone through the roof, I'm sorry. I just can't, accept that. 121 million on the buy, 87 million on the sell. Come on. Where is the logic? They've inverted the reasoning to confuse you. I'm trying to get you to understand their reasoning and their logic, which is completely outside the box, and that's why many retail traders cannot win this game. Now suddenly we're back at break even. 128.9 million on the buy, 99 million on the sell. Talk about high frequency trading at its best. They've thrown the kitchen sink at this candle. 132 on the buy, 99 on the sell. Difference of 34 million bullish volume, and this thing hasn't gone through the roof. See, there has to be some logical explanation why price action has not driven this, and momentum has not driven this candle up. I have a problem with that. Now let's see how this one comes in. You got 3.4 million on the buy, 7.1 million on the sell, 7.7, 7.9, 8 million, 8.1, 8.4, 8.9 million, 9.1, 9.8, 11 million negative against 3.6, 4.1 million on the buy, 12 million on the sell. We're only down 1 pip. Now we're at break even. Now again, we got in on this candle. So this is the last candle that I'm willing to wait on. If nothing happens in this candle, I need to see a swift reaction in this candle. One, it has to break below this trend dot, which is in line with this pivot. It is currently trading up here. There's a pivot right here. If it breaks below this level, then we know that it has to come down to this level, to 79.35, which is nothing. But that's not what we're trading. We're trading for something. We're trading for knowledge. We're trading for results. We're trading to define, does this work or not? The answer is yes, it does. It works very well. It works better than anything out there right now. Because all these guys that claim to be traders don't know what they're talking about because they can't explain what is happening. They have no explanation. They explain, what happened. Oh, I would have done this if this would have happened in the market. No, I'm explaining to you now, live in the market, as it's happening, as it's playing, so that we can understand risk. We can understand reward. We can understand strategy. We can understand math. We can understand reasoning and logic behind their decision process. We can understand support and resistance. We can understand mean reversion. Oops, did I say something? Yeah, that's one that I teach in private to people that buy the software. And so suddenly now we have volume divergence. Oops. And we have a positive result. So the question that I have for you is, can you continue to trade the way that you trade without enough knowledge and information, and without using the right technology that will give you an edge to understanding how these robots manage risk, use support and resistance, and basically slaughter the retail trader, because the retail trader does not understand the institutional mindset? Can you continue to trade in ignorance? Or do you believe that you need to learn the truth before you continue so that you have a chance, a fighting chance, of beating them at their own technological chess game? This is chess. That's what this is. This isn't poker. This is chess. Every move they make is for a specific reason and outcome. They are looking for a specific reaction from you. See, this trade here, as they went up and they were holding here, they were trying to basically just induce you, trick you into going long, when in actuality, their whole reasoning was to go short. That is the lesson that is given today. Again, I didn't expect a big trade, but I expected a trade. The first trade didn't play, but we still came out ahead. This one played, not the result that I'm looking for, but a result. I like 20, 30 pip trades. That's what I like, but I will not turn away from 7 to 12 pip trades either. If that's all the market's willing to give, then there's nothing more than I can take. There is no news drivers today. Fundamentals are dead this morning. And so they are not motivated to move. They're motivated to maintain balance in the market. And that's why we call this portfolio rebalancing. That's another lesson that I teach in private. Because you have to understand what their strategy is all about. Maintaining balance. That's it. That's all there is to it. So I told you they were going to come back to this pivot. Now, if they break this pivot, they come down to this pivot. If they come down to this pivot, then basically, we're looking at a few pips. 15 pips. I'd love for them to come all the way down here. Are you kidding? That's 20 pips. They come down to 79.24. Then at least I can go away this morning saying, well, I didn't find a big trade, but I found one that was at least worth my time. Where's the stop? Well, now, since the stop was up here, now you can move your stop down basically 1 pip above your entry, so that if anything, you're at risk 1 pip. But the minute this goes down 10 pips in your favor, then you should immediately move your stop loss to break even. We are 1 pip from 10 pips. Now we're up 10 pips. Now you can move your stop loss to break even. So I hope that I have inspired you today for something better, for something greater, for something to believe in, because it's hard to believe in trading. Many people can't do it. They just don't have it, because they are blinded by fear and doubt, and as well they should be, because the way that these banks have programmed these robots and algorithms have been to trade off of your fear so that you stay away, so that you don't beat them. Well, today we take a stand. We say, enough is enough. We're not going to believe your lie. We're going to decrypt your lie, and we're going to use your lie against you. Because behind the lie, there is a truth. Behind every mathematical question, there is a theorem. There is a proof. Behind every poker table, there is a poker face. There is a bluff. There is a winning hand and there is a losing hand. Behind every piece of music, there is noise and there is melody. We must distinguish the noise from the beautiful melody. And behind every trader, there is a result, a good and a bad one. And that's it. And that's all that I have for you guys today. I don't see this going any further, so we're going to close the trade. And we will say thank you very much for joining us here today at Phoenix Trading Strategies. It has been a pleasure having you here, showing you what the markets can and cannot do, what you can do if you believe in yourself and you believe in Phoenix Trading Strategies. All you have to do is basically call me. Number is 818-431-1357. My email is ricardo@phoenixtradingstrategies.com. You have my Skype, ricardo@pfg. I've had that one forever. And I will see most of you on Friday morning, same time, same place, 9 a.m. Eastern. And for those of you that are here that are registered and that own the software, we will see you for the European session. Do not miss out. We will have it this Thursday from 2 a.m. to 4 a.m. Eastern time. I want to thank you very much for joining us today, for being here. Can I hire you? Peter, you're funny. We'll talk. Have a great day. Thank you so much for joining us here at Phoenix Trading Strategies. Bye-bye now.